All right, good afternoon, everyone from Hong Kong. My name is Benjamin Quinlan. I'm the CEO and managing partner of Quinlan Associates, and today we're going to be running a webinar on optimizing trade finance and unlocking the cargo service finance white space through non-traditional alternative data-driven lending. So today I'm joined by a great lineup of speakers, all of whom are CEOs in their respective roles. I think for today, I just want to recap the agenda. So at the start, we're going to be sharing some perspectives from the recent report that Quinlan Associates published with eCOM on the broader trade finance and cargo service financing space, particularly in Hong Kong. And then for the remaining 45 minutes of the session, we'll be doing a panel discussion with the speakers here today. So maybe as a quick introduction, we can just go around and all the speakers can briefly introduce themselves to the audience. So perhaps we can start with Horace. Over to you.
Hi, everyone. My name is Horace. I'm a CEO of eCOM Registry. So eCOM Registry is a fintech company. We target to do the data-driven financing facilitation between our customer or community, the supply chain community member, to be able to enjoy the lending product from the financing institution. Thank you.
Wonderful. Thanks, Horace. Over to you, Philip.
Hey, hello, everybody. My name is Philip Ho with OnePort. OnePort is a joint venture company among the Hong Kong terminal operators, and we provide electronic services to our port community so that they are able to go in and out of the terminals to pick up or to discharge containers at our terminals more efficiently. So it is my great pleasure to be invited to be a speaker today. Thank you very much.
Wonderful to have you, Philip. Gianluca.
Hi there, Gianluca Pizzituti here. I'm the CEO and co-founder of VeloTrade. VeloTrade is a fintech company in the alternative lending space. We provide financing to different SMEs in different sectors, and we leverage data to be efficient and to make sure that we provide a more inclusive finance for more companies. Thank you.
Pleasure to have you, Gianluca. And last but not least, Anthony.
Thanks, Ben. Good afternoon, everyone. Anthony Lin from Standard Chartered Bank. I'm the head of Asia for transaction banking, which treasury management, cash management, and trade finance is my core business. I'm in Standard Chartered Bank is an international bank, cover over 50 markets globally, and we are a trade bank. We are number 5 trade bank globally, and so very happy to be here because I think what we're going to discuss is going to be something very exciting and transformational from a trade and financing space. Thank you for having me. Thank you.
Pleasure. Thank you, Anthony. So as mentioned, I'm going to start the session just with a quick recap on some of the key takeaways of the recent report that we published with eCOM the other month. Someone in my team will share it in the chat group, just a link to that if you want to read it in its entirety in your own time. But I thought it would be a good way just to create some context for the discussion we'll have for the panel discussion, because there's some interesting data and insights that come from this, and it's obviously opening up a new space around what we see as cargo service financing, which really isn't covered very well. So I'm going to just give a few key snippets from this paper. So just bear with me for the next 5 to 10 minutes. Hopefully we'll get through this nice and quick. So I guess the broader story is, where is global trade going? And we saw in the lead up to COVID-19, there was a bit of a dip. And obviously when things rebounded, borders started to reopen, we saw global trade value really take a bit of a sharp uptick in a post-COVID environment. So global trade activity sitting at about $23 trillion at the end of 2023. And the APAC region, interestingly, accounts for about 40% of global trade activity. So it has a very significant role in terms of where global trade is. Now, within that context, where does Hong Kong sit? Hong Kong is actually a very small geographic country, very small population size, but we consistently rank as one of the top 10 global markets by total trade value, about $1.1 trillion of combined imports and exports in 2023. So obviously it puts us in a very strong position in terms of the relevance for Hong Kong with respect to global trade. But of course, we're in this very interesting environment. We have what is effectively an ongoing geopolitical and trade war with the US and China. That's kind of dissipating to other markets, like we've obviously seen conflicts with Russia, and that has impacted their ability to trade with the West. So there's quite a few headwinds which have obviously impacted the global trade climate and sentiment. But inevitably, there are tailwinds that are continuing to support the longer term structural growth in trade, particularly around advancements in technology and in infrastructure. So technology, a lot of initiatives aimed at digitalizing existing trade processes, data sharing to optimize supply chains. And you're seeing that driving a lot more innovation, particularly around uses such as technologies like blockchain to drive supply chain financing cross-border. Infrastructure development, huge amounts of investments are being made in ports, railways, highways, for example, in emerging markets, One Belt, One Road initiative to enhance global connectivity. Again, a lot of these initiatives are structural in nature. So despite what is an unfavorable geopolitical backdrop, we still see trade very much on the radar as a key part of global growth activity. Now, the interesting thing is when people usually talk about trade, they think of importers and exporters, right? That's where most of the conversation starts and stops. But in addition to the physical trade of goods, global trade relies on a very intricate and deep network of what is effectively defined as this cargo services ecosystem. These are the enablers or the facilitators of international trade activity. So you can see this iceberg above the line, the exporters, importers. It's really this ecosystem that sits below it. These are your freight forwarders. So for example, these are the intermediaries between the traders and the cargo service providers. You have your truckers, which actually deliver the cargo between the warehouse and the ports. The ports operators themselves, they manage the terminals and operate the port facilities. And of course, the shipping lines who operate the cargo vessels that carry the goods to and from different countries. So it extends well beyond the trade of goods. The cargo service ecosystem is really the focus of today's discussion, and they play a crucial but often overlooked role in facilitating global trade activity. Now, the fact is a lot of the participants within the cargo service ecosystem have many pain points that they have to face, particularly with respect to where they sit in with respect to payment settlements, and also what I would say is limited financial offerings to address a lot of these pain points. So if you look at each of these constituent stakeholders, there's a lot of fees that they have to pay to operate in their respective ecosystems. So for example, your importers, exporters, they pay trucking fees, customs fees, port charges. Your freight forwarders, the same, but there's also documentation fees, ocean freight fees, truckers, your fuel costs, your driver and worker salaries, and so on and so forth. And you can see down below some of these struggles that each of them face, like payment cycle mismatch, currency mismatch. So what I'm going to do is just run through each of these briefly to give you a little bit of an idea of some outside-in pain points and objective views around where some of the current struggles are with respect to financing. So the first one I mentioned was payment cycle mismatch. And what we see through our research is there's actually quite a sizable mismatch between payable and receivable maturity periods for all the stakeholders in this ecosystem. And that creates significant demand for credit to bridge a lot of these working capital gaps. So you can see down below the payable receivable periods for buyer importer invoices, 60 to 90 days, forwarder handling fees, 60 to 90, declaration fees up front, and then payable receivables on the other side, 30, 30, 30. Some of these are quite protracted in their nature. And of course, cash flow really matters, particularly in an environment where, the global economy has not necessarily been running on full steam. So the fact is these mismatches have also become a bit more pronounced of late. COVID started to exacerbate some of these payment cycles, and that made it much more difficult to manage ongoing working capital needs. Of course, the next one is payment currency. So you see a significant portion of payments settled in foreign currencies. So exchange rate fluctuations inevitably place huge pressure on the importer and exporter working capital needs. This is just some examples around the total port cargo breakdown by country. You can see that in Hong Kong. And most of these trading partners, mainland China, Indonesia, Japan, Malaysia, you can see the fluctuations in the exchange rate. For example, the HKD Japan yen, the coefficient of variation was 12% from 2019 to 23. So all of these fluctuations, they either need to be hedged, which adds a cost, or if they're unhedged, that adds constraints or potential challenges around paying for working capital. Freight rate fluctuation. Here's another thing. So COVID-19, you saw cargo service related charges being extremely volatile. So that impacts a lot of the stability of importers, exporters, and freight forwarders. So this is the global container freight rate index. And we had a look at how this is tracked from pre-COVID to post-COVID. You actually saw the same shipping routes experience a 7 times increase in price difference within just a period of 2 years. Now, obviously, after the dramatic spike of COVID, they have normalized a lot, but this is a real concern in terms of managing cash flows and payments for many of the stakeholders in this ecosystem. Labor costs, here's another one. So ongoing labor shortages, you can see below number of employees working in land transport and other transportation, storage, postal, courier. The growth in this segment has been on the decline, about a 1.3% 5-year minus CAGR, and then almost a negative 5% CAGR for the other transportation sector. That's put a lot of pressure on wages. So monthly wages over the period have been on the rise, and again, another cost which necessitates a need for financing solutions. You even see payment reconciliation. Even after the payments are collected, a lot of shipping lines have very tedious reconciliation processes, and this can significantly delay the release of cargo to importers. So a lot of shipping lines, some pain points are invoice matching, the payment identification, and then currency discrepancies that may show up. So again, any delays to the release of this cargo equals delays to payment equals, again, working capital challenges. And then shipment delays. And the other additional costs that come from that. So you can see container deliveries delayed for 1+ days. Again, this is having a look at the top graph, the percentage of container shipments that have been delayed on a global basis. And then geopolitical shocks, restrictions from COVID-19, this has seen this spike quite dramatically from pre-2019 levels. There's also additional fees incurred from these delays. So it could be port demurrage, detention charges, trucking detention, futile trip charges, and then all these other indirect costs. So again, these delays have very real impacts in terms of cash flows. So all of this, what does this mean? Well, the cargo service credit market in Hong Kong, we estimate an addressable finance gap about just over $500 million US. Largely untapped. It's something that we think a lot of lenders can look into, but many of them aren't currently servicing these exporters, these importers, the freight forwarders, truckers, operators, and shipping lines. It's really the ones that sit below the exporters and importers that face, I would say, the largest financing gaps. And why is this so? Of course, there's a lot of reasons. You can look through our report, but there's a couple of core reasons why lenders shy away from this part of the ecosystem. Pre-lending, there's concerns around the amount of data that is available. A lot of this is paper-driven processes. They may not have sufficient information, or the data is locked in silos. So it's hard for the lenders to access and understand. Ticket sizes for a lot of these fees tend to be smaller in nature. Again, that equals smaller marginal returns for each loan. Lending frictions as well. So lack of collateral. Many of these services don't necessitate any collateral that's attached to them. Also high processing costs, and then high volatility in credit risk as well, because of all these geopolitical fluctuations. Particularly at this time, it does create challenges, and they induce volatile cash flows with the cargo service providers. So again, all very real risks. But The key thing, and that's what we're here to talk about today, and I'll be wrapping up this this short intro now, is just the potential for lenders to leverage new ways of risk modeling and new data to pre-qualify loans and optimize the credit scoring process for many of the stakeholders in this ecosystem. So again, I'm not going to spend any time going through this. Please spend time having a look through the report. It will tell you a bit more detail. But if we look at the journey, for example, that can be taken and the kinds of new forms of alternative data on the right-hand side, you can see some sample pillars in there. What kind of new approaches can be taken to really tighten up the process across the lending journey, make a lot of these things pre-qualified, instantaneous, and just to smooth out the process, which I would say traditionally has either been completely seen as a white space or one that has been extremely tedious to service. So I think with that in mind, if you just want to have a look at the report, you can obviously go to our websites, but to really unpack, I guess, the meat behind this, the purpose is to go to our panelists, and they're the ones who are going to share the best insight on this particular piece. So I think with that in mind, let us go to the first question of this session, and I'm going to direct this at Philip from OnePort. So we obviously know that exporters, importers, they're the main participants in need of financing. But there's these whole group of entities operating behind the scenes in this cargo service finance ecosystem, which we've briefly introduced. Now, you've been in this ecosystem for a while. I think it would be great to understand the role and financing needs of the market participants, such as the port operators, the freight forwarders. How significant is their need for financing?
Oh, yeah. Thank you, Ben. Yeah, you are absolutely correct. Along the whole supply chain, other than the importers and exporters, there are many other stakeholders conducting different logistics activities along the chain. And the traditional trade finance that we talk about pertains very much to the importer and exporter through letter of credit, for example, the LC, right? And for the rest of the other stakeholders, it doesn't mean that they don't have financing, but because the cargo don't belong to them, right? They can't finance on the cargo. They can get financed on the service that provide and also the turnover that they render to the companies. But however, as you mentioned extensively, the pain point of these service providers in the ecosystem is they are facing a problem to match with the requirements of many traditional banks. If the banks process a $100,000 loan versus $1 million loan, and the procedures and the documentation probably more or less the same, right? So if you were the bank, then you would choose for $1 million loan to take care of, and so that's why we think there's a white space or a space amongst the cargo service provider, and they are really underserved, right? Especially for the SME. Yeah. And according to our understanding, SME loan application is turned down more than 50%. It doesn't mean that they don't have the capability to repay. It's just that it's so headache and all the pain points that you mentioned. So about 5 years ago, we worked along this, and then we talked to the customer, especially for some service provider. They need to have faster cash flow. They don't actually require a long-term installment loan for 12 months or 18 months. They want to have fast turnover working capital to meet with the cash flow issues. And this is something that we would like to see. But when we get onto the banks, and it's quite interesting that right now, the risk assessment model is not picking up the pace to look at something else. They still look at collaterals. They still look at all the traditional documentations to approve the credit. So that's basically, we go back to the old problems, right? And so that's why in this age of digital transformation, data is the king. And we have a whole bunch of stakeholders, our service providers, working on our service platform. They accumulate a huge amount of data, transactions that we can make use of. And then we also impose our analysis and basing on our domain to explain the analytics to the banks and the financial institution to make them understand that this set of the data can be provided to the bank for credit assessment from another perspective. It's like what you said is an alternative data-driven financing, the lending. So this is where we are coming from. And we do hope that, from this angle, in the long run, we have faith and we have passion, right, to make sure that this path is, going forward right. So this is basically what we're trying to do. Yeah.
Great. No, good insights. I think, your point on SMEs having particular problems, it very much resonates. It's not just that they're rejected so much. Our research indicates in Hong Kong alone, about half of the SMEs that need credit don't even bother applying. So that's the other end of the spectrum. Gianluca, I mean, let's move to VeloTrade. I mean, you've operated this online marketplace. You connect organizations in need of financing to sell their trade receivables to potential investors. Obviously, this idea to alleviate working capital constraints and support growth, it didn't materialize overnight. So could you share with us the key working capital constraints that you see, or the pain points which motivated you to launch this venture?
Certainly, Ben. So we must start by saying that more inclusive finance is on top of the agenda of the World Bank. Several years ago, this topic started to be of interest to the major institutions, and it will be still of interest for many years to come. So definitely our idea doesn't start out of the blue. We have taken into consideration a lot of variables before we started to do this business. The key element that we have to consider here is that while sure enough the finance gap is in several trillions of dollars worldwide, we must consider that not all SMEs are credit-worthy or merit-worthy of obtaining a loan. So it's not only because banks are lazy or banks don't want to cover the small SMEs. Banks have a reason why they don't want to do that. And most of the times, this sparks out of the concept that a small SMEs has rather flimsy finance overview of their own company. I mean, it's sad to admit this, but not all SMEs understand what they actually are doing. So what we in VeloTrade are looking at is, if we take, for example, as an analogy, a pyramid. So there will be the top of the pyramid that is the large SMEs that are already well covered by banks. And this is something that no alternative lender can get into, because that's a purely 100% banks territory. And almost 100% of the companies in that top of the pyramid are covered by traditional lenders.
Yeah.
Then, as opposed to the top, we have the bottom of the pyramid, which is a territory that no one wants to touch for obvious reasons, because either the SMEs has poor internal procedures, or they have not so clear KYC procedures. They do not really know themselves what they are doing. So this is the very bottom of the pyramid. Now, there is the middle of this pyramid. That's where we, VeloTrade, are looking, we and other lenders, alternative lenders, are looking at. So more specifically, we'll be just below the bank's acceptable levels. And our value proposition to our prospective clients would be, hey, you start off with VeloTrade, and then after a few months, you will become bankable, and then you will move on to be served by the banks. Now, because the middle pyramid is still a very, very big chunk of the SMEs, there is a lot that we must be taking into consideration before we are actually safe to lend. There are many variables we take into consideration. Probably this is not the right venue to consider all the variables, because I understand that this meeting is mostly about the cargo owners, but the concept here is to be able to understand how and if this company is capable of repaying the loan. And the fact that the company is not bankable does not necessarily mean that it's not creditworthy enough. It just means that it doesn't tick all the boxes from the bank standpoint. But again, because we are an alternative lender, we want to make sure that we are carrying out our assessment in a comprehensive way. And definitely data is one of the tools that we use the most to consider whether or not we are capable of lending.
Great. Okay. Wonderful. All things that resonate with me. I mean, Horace, what about you? We showed this, this financing gap in terms of cargo services, but the trade finance gap we calculated for Hong Kong was about $8 billion US. So addressable cargo servicing financing about $500 million, right? So it's clear a lot of the incumbent lenders are struggling to adequately finance the stakeholders within the ecosystem. Resonating with Gianluca, of course, there's a natural reason why. They're doing their job. They can't finance everyone. Some people aren't creditworthy. But you're a tech provider. You've closely engaged with numerous banks in Hong Kong. Could you share some of the challenges you see being voiced as they attempt to capitalize on this largely untapped market or this white space?
Yep, certainly. In the last 3 and 4 years, we're working very closely with OnePort. And in fact, that when OnePort come to us saying that, okay, how can we help the Hong Kong Ocean Terminal community to what they call activate the data so that they can facilitate the financing for the market, for the community. So we have been working with a lot and talking to a lot to the bank, and even the traditional bank or the non-bank financing institution like VeloTrade. And in summary, we discover 3 major challenges in this market for the lender. So first of all, the most important one is how can they get a good customer? So in terms of customer acquisition and the customer outreach. And it is a challenge for the lender to find the quality cargo service customer, because the cargo service provider, such as freight forwarder, transportation company, or shipper, are fragmented and spread across the entire supply chain. And in particular, they are very asset light, and primarily they are service oriented. They don't have a lot of a tangible asset to be collateralized for the financing. So on the other hand, this particular cargo service provider, they are not as simple as the traditional cargo trade. The traditional channel trade is basically a buy and sell relationship. You can have a contract, you have a bill of lading, you can have a invoice, then can facilitate trade finance. But in terms of the cargo service financing, the lender is found that it's difficult to understand their business. It's very hard for the lender to see through their business in a complex supply chain service environment. So the lender is very hard to identify whether the cargo service provider are providing a true and legitimate service activity. So as such, the lender may say, okay, I don't want to take on additional exposure on the risk by providing non-categorized loan. So a lot of time, the lender will spend a lot of time to do the KYC, to do the loan application, but at the end of the day, they will reject it. So that's why it's very costly for the lender to do that.
Yeah.
So secondly, it's about operational efficiency. The operational efficiency is like client customer onboarding. The KYC and KYB process still pretty much document driven. And as I mentioned before, the nature of the cargo service provider is a service oriented. They have a lot of the paperwork or a lot of a service in different events or milestone to happen, and a lot of fee for receivable or payable happen across supply chain. So in order for the lender to go through their KYC to check on their documentation, it's a much huge amount of the documentation that they need to validate. So for the loan processing, then, you know, as Philip mentioned, it doesn't really matter as $1 million loan or $100,000 loan. The lender still have to go through the same process to approving the loan. So because there's a lack of the data that they can use, which is in particular the trusted data, the trust business data. So they're very hard for the lender to do the pre-qualification for the applicant and creating a high rejection rate. So in particular, when we're talking to a lot of lender, for the land disbursement and drawdown, the lender, the traditional bank or traditional lender, they still require a document-driven process to do the drawdown. But in the cargo service environment or ecosystem, they need the financing product inject into their ecosystem practice. So for example, the freight advancing. So how can you help the ecosystem player or the cargo service provider to advancing the freight payment? In particular, the freight is basically go up and down. So this type of the financing product have to inject into the cargo service ecosystem practice, which is the traditional lender is hard to do that at the moment. Of course, having said that, the ongoing tracking, you know, with the current unstable of the economy and also geopolitical tension, the lender is seek urgently to look at the visibility of ongoing business of this applicant. The lastly is about the readiness for them to adopt the alternative data technology. So lender has been using alternative data to validate individual trade transaction for many years, such as a bill of lading, trade and custom declaration. So for them to use additional data to validate a transaction is not something new. But with the current technology infrastructure, they are not ready to consume historical trade and shipment data. So there's a lot of amount of the different multiple data source for the historical trade and shipment data. They're not ready. They're not ready to take on to it for the KYC, KYB, for the credit assessment, even though for their regulatory client audit. Risk modeling development to consume alternative data still at the early stage. The traditional lender need more time to test and validate the risk modeling. Lastly, as I mentioned from Philip, is like the ticket of the cargo service provider is relatively small, so the lender has less justification to speed up the development to adopt alternative lending for the risk modeling. So that's my discovery from last 3 years working with the bank.
I'd say that's pretty comprehensive view. And I mean, let's go to the banker in this group, Anthony. So how do the challenges that Horace mentioned resonate with what you're seeing at Standard Chartered? Are there other challenges you'd like to add? And why, in your view, is it so hard to cater to this micro and SME segment?
Yes, thanks, Benjamin. Honestly, I think Horace, Philip, Janaku already share a very comprehensive analysis of why banks are leaving this white space untouched. It's not because the bank are not willing to do it. It's really because, you know, this is it's a space that the traditional banking practices it just not worked. Okay, the few keywords, right? High volume, small ticket, high transaction costs, and there's no way the bank can demonstrate we can manage the risk in a very kind of a sophisticated manner. So risk management is the key thing of the bank. However, what I want to share is not repeating what other panelists have shared, but forward-looking view. We are big believer in data-driven, using alternative data and leveraging on new technology to address a lot of opportunities or wallets that traditional banks cannot access in the past. So we have we've done it in a multiple way. Okay, for example, very exciting, Horace, when we first met, we have a lot of conversation because as a bank, we have a lot of data. However, we will never be able to collect the type of data that Horace, OnePort, they're able to provide. And these are very valuable data to prove the genuineness of a transactions, even very detailed flow from one point to another point, changing hand. But like Horace mentioned, this is actually, they are the expert in this field, right? And for bank to acquire that level of knowledge in every single step and then build a model to link all this data and turn it into a risk kind of assessment tool. This is a journey, okay, but we believe that's the direction to go. And some example, we are also exploring like blockchain using DLT to make sure we have a good tracking of the supply chain, so that we can go all the way down to finance some supplier, which is like 13, 14 level away from the big buyer. We are investing in ventures, really supporting some of these SME by trying different new technologies. So I think that is the direction of travel. Standard Chartered is definitely very committed to that, and we believe if we can find a way, we can crack this, right? We can serve not only the cargo service sector, which is already a very big high opportunities. There are many other pockets on the planet, a lot of underserved SME that we want to serve, and I think technology and innovation is probably the only solution to that.
Yeah, really, I mean, good points. I mean, building on that, you mentioned some work around blockchain, obviously understanding that looking at these new data sources, it takes time, it's a journey. Are there specific developments, particularly around trade financing, that you're exploring? Has there been, for example, digitalization of certain back-end processes? If you are looking at alternative data and integrating it, how does it sit alongside your traditional processes, right? Is there like a veto? Is it supplementing? I'm just curious to unpack a few of these in a bit more detail if you can.
Yeah, a lot of things is happening, and I think digitalization is one thing. I mean, one of the big cost element is really processing, and when things are happening in paper, with paper, then there's very little room for you to squeeze your cost down, right? So we are putting a lot of effort. For example, we have a lot of supply chain finance program, supplier finance program, and traditionally involve a lot of invoice, whatever. But now we have a platform that basically, the latest version is will be available very soon, right? A supplier to a big anchor, they only need 3 clicks on our portals. You will get your financing done, and you will have very nice reporting of when the loan is due, whatever. A lot of automation. This is and also a lot of effort in digitizing a lot of traditional document. I think this require, when you come to trade, right? Trade is very complicated. When you come to treasury management, cash management, a lot of things you can straight through. It's much more easier. But trade involves so many parties. I think Philip, Horace also mentioned you have letter of credit. Imagine if you have ever touched a set of letter of credit, you would know how many different documents is in one transaction, how many parties, you have a shipper, you have an exporter, you have a buyer, custom, a lot of things. I think you need a concerted effort of the entire industry, but I think globally everyone is having the same goal, but how to make all these things happen. And that's why I mentioned that's why we're exploring different ideas. Blockchain, and we are very active in, you probably heard about Project Ensemble, that Hong Kong monetary authorities are driving to build a digital asset, a digital deposit, a tokenized asset, tokenized deposit. I think this is a very important infrastructure to really enable a digital economy. And with all this infrastructure, together with these valuable data that OnePort, that eCOM is able to provide, this has to all come together to really unleash the full potential. So we are trying many different things. What we can digitize, we digitize. However, there are certain things we can't, then we will keep, like today's forum, right? It's a very great forum to get all the audience together to collectively work towards a more efficient digital economy, especially for trade.
Absolutely, absolutely. Well, thanks, Anthony. I guess we heard from the bank. What about MBFI front? So Velo Trade, back to Gianluca. What initiatives have you rolled out to support the alternative financing list solutions that may not be thoroughly explored by some of your traditional lending peers?
Ben, look, the point here is the ecosystem of SMEs is very, very different. You have small SMEs and you have large SMEs. So when you have a prospect coming forward, then you need to be able to be very quick in assessing whether or not it is worth for your organization to spend time on this prospect. And I think that's where VeloTrade has got an edge, because we are very quick in understanding whether or not we want to invest our time, because ultimately time is the most expensive thing that we have, and we want to invest it carefully. So I want to just step back on a comment that Anthony made about digital adoption and all the supply chain programs that the banks are run. So what we have realized is that it's not just about the program itself, but it's mostly about the adoption rate that these programs get out of the small SMEs. And let's not forget that these SMEs have, most of them, when they are rather small, they don't have a proper understanding of what they are required to do when they are presented with a program. And that's why sometimes these large supply chain programs, they are only catering for the large segment of the SMEs or this defined anchor. So what we are trying to do, and what we are actually doing successfully, is to present the offering in so to speak, layman terms, because we want to make sure that the SME that needs to accept the terms and conditions and actually accept the lending, they understand it. Because most of the times this SME's owner shy away from it because they simply do not understand what it is. Because on their end, when we speak to them, and I spoke to many of them directly on a person-to-person basis, and they simply tell me, I need a loan. I need a loan to do my business, because now I need to cover more expenses. I have an extra order to fulfill or an extra service to provide, and I need a loan for this period of time. Now I go to the bank, and the bank, if I'm lucky enough to be in a supply chain program, which I don't even know what it means, they tell me, I'm presented still with like 50 pages of legal agreements that I need to sign here and there, and I'm not sure what I'm supposed to do. Or if there is no program, which most of the times it isn't any program available, because the program, let's not forget that the program is only initiated from the buyer side. So if these SMEs do not sell to extremely large and bankable buyers, most likely there is no supply chain program available for them. So we go down to the fact that we need to assess the creditworthiness of that SME without taking into consideration the buyer, because unfortunately these two do not link well together. So from a small SME standpoint, they need a loan. We just need to have enough information, and that's the key here, to get enough information to make sure that we understand whether or not this SME is creditworthy enough or merit-worthy. Again, these are two different words here. I want to make sure that we highlight well enough, because a company could be creditworthy enough, but if it's not merit-worthy, meaning that they are doing a business on a not really a random basis, but on a way that doesn't make us feel comfortable to that. So the company can be creditworthy, but the creditworthiness can quickly deteriorate. So you need to go down and understand who are the people running the company. And ultimately, this is something that can never be taken out. So you can understand it from partially from a data standpoint, and that's good enough for us to understand whether we want to continue looking at that subject case. But also you need to understand who are the people running the company, because ultimately, when bad things happen, then it all goes down to how the company is run. That makes the difference between make it or break it in difficult situation. So again, data is very important, but data is not the only key here, you know. And because going back to the fact that these SMEs are small, sometimes data may be corrupted. I'm not saying that, you know, they corrupted on purpose, but just because sometimes they are not clean enough, you know, they don't keep their records properly enough, then that's where data standardization is very important. Because again, it allows us to make sure that we are capable of spending time where it is worth us to spend time.
Yeah, very true. And you know,
Ben, if I may,
go,
just
Anthony.
add on to Gianluca's comment. I think again he rightly described the challenges that we are facing. So when we come to the small SMEs, I think the risk modeling probably should not be built on the traditional concept of risk management, which is a corporate risk concept that you look at the organization as a whole, look at the balance sheet as a whole, and then future cash flow kind of thing. I think that is just impossible. I think in terms of effort and also the data, I mean, the company probably don't have all this information. However, with the alternative data, we were able to see at a transaction level to build a track record. We know this company has been doing the same thing in this pattern, growing, and because these are the data coming from a credible third parties, right? Instead of you receiving the data from the customer directly. Now this gives you another level of comfort. And because we know the supply chain well, we know how the data, money flow from this to that. So you also have a good visibilities of how funding is flow. So I think built on all this data, we have to establish a way of financing transactionally. Okay, so you can make a very quick decision when you see data not moving right, then you can stop rather than waiting for 12 months for the next audit report to come out before you understand things are not happening. So this is a very different way. You have to be much more agile, dynamic, and also look at risk from a very different perspective.
Yeah, 100%. I mean, so the points that resonate, Gianluca, I work with a lot of startups and everyone goes through bad times. I always look at the founders as the number one criteria in determining how successful they're going to be. And Anthony, you're right. Traditional ways of looking at information are changing. Ways that data is being utilized is fundamentally augmenting the way that creditworthiness and risk is being looked at. I mean, that ties now into Horace. I mean, Horace, you live and breathe this for a living, and you know, you see. We've been chatting about digitalization, enhancing some of these processes, but it's really this alternative data being this key enabler and bridging a lot of these financing gaps. But incumbents and fintech disruptors still face hurdles naturally in harnessing a lot of these non-traditional data sources. And this is an area that you're clearly looking to address. How do you specifically address these challenges with what you do?
Oh, well, I think we see ourselves three roles to address these challenges. So in Hong Kong, we are partnering with Hong Kong Ocean Terminal Port Community Service Provider like OnePort to offer our service in three ways. So first of all is about data. Gianluca talking very correct is if the data is corrupted, it's not the right data, then it's going to be misleading the whole business scenario. Mm-hmm. So the first solution that we're offering or we try to service the market is data service. So we particularly very focused on trust data source. So we try to connect to multiple trusted data source. And this data, when I said trust data source, is the party who managed the data or create the data, who has the ownership of the data, which is trustful party like ocean terminal, like shipping company, like trade declaration partner, etc. So we partner with this trusted data source, and then we build a trusted data network using blockchain in order to maintain the data ownership, to protect the privacy control over the blockchain, to make sure the data can be transferred or exchanged through the trusted data network and maintain the chain of trust. So along to that, we also providing technology using AI and machine learning in order to provide the business insight analysis. So the business insight analysis through multiple trust data sources generate a 360-degree of the business activity. I'm not talking about to replace KYC and KYB, because KYC and KYB is more than that. But we are focused on the business insight analysis so that the lender can look at the 360-degree of the business activity of the particular cargo service provider or particular applicant of the borrower. So at the same time, they can utilize this data to build on the credit risk assessment report. So that's what we try to do, is utilizing historical data, historical trade and logistic and shipment data to do the business insight and the risk analysis. At the same time, we also providing real-time data through the multiple trust data source in order for the lender to first validate the transaction or do the data triggering or event triggering for their financing service. For example, advance the payment for the freight, etc. In addition to that, of course, the data for the real-time ongoing data can help the lender, like Anthony said, to continue monitor the performance of the borrower so that they can make certain adjustment, rather than after 12 months later, they can make different adjustment for the risk mitigation on the monthly basis, weekly basis, or quarterly basis. So that's the first step of the solution we're looking at. The second of them, the solution is about very simple. It's about pre-qualification. So with the data, we can help the lender to select based on their criteria what the customer will be catered for their solution. So they can pre-select a qualified customer so that they can easy to serve them and quicker to serve them and with a lower cost, rather than going through the whole lengthy process and then find out this is not the right customer for them. And lastly is when in Hong Kong, when we're working with a financial institution, we've identified that a certain financing product, which is the market need, the cargo service environment. However, the bank is not ready to do that, then we may providing direct lending. So for example, at the moment, we're rolling out a solution about direct lending is called eFreight Pay Later. So the cargo service provider can we can help them to advance the payment for import-export freight or the terminal charge along with their supply chain requirement. So as long as they want to pay, we can help them to advance, and then we can basically is collecting the receivable again after 60 days or 30 days or 90 days, etc. So that is something that we can do direct lending. And in the long run, we will open to partner with the financial institution for the co-lending, especially in China mainland. We look at the co-lending model so that more and more lender can using the co-lending model to participate into this cargo service lending opportunity.
Yeah, got it. Great. Okay. I mean, Philip, I understand that eCOM leverages data sourced by OnePort to facilitate this account review, pre-qualification, etc. Can you just give some examples to the audience on the specific types of alternative data being leveraged and how this is helping to address the financing gap that we're discussing?
Yes, absolutely, Ben. When we talk about data, I don't try to make it too technical and so difficult to understand. So I try the best to make it a simple way. Basically, the data generated from OnePort is all on container base. Okay, container. One container is a unit. So when we look at container, we have two parts of it. One is we look at the movement of the container.
Okay.
All right, the movement. So from the movement perspective, we can tell from the vessel level, for example, the ETA, estimated time of arrival, estimated time of departure, and all this, and the port of discharge and port of loading, and all this information pertains to a vessel level. Of course, a vessel holds thousands of containers on the vessel. Okay, this is the vessel part. So the other part of the movement is whether or not the container has already gated into the terminal, has already put into the yard of the terminals, or whether or not a container has been picked up by the haulier and then leave the terminals already. So we are talking about the movement of the gate activities, right? From this perspective, then we are looking at the container where it is at the moment. All right. Now the other part of this is, of course, the contents of the container, what is inside. Okay, and this part, of course, from one perspective, we work with the other data provider from trade declaration agency to have the trade declaration information, where we are able to, under the customer consent, to look at what is inside and what is the trade value of the content. All right. So basically, these are the two parts of the container information we are looking at. But if you look at the individual part of it, it doesn't generate the real beauty of it. Remember, Jinuka and also Anthony and Horace also mentioned about data corruption, right?
Yeah.
How do we make sure, further to make sure the data is authentic or is real, right? If we have a trade declaration declare that there was a container exported from Hong Kong last month, right? How do we make sure of it? Because anybody can go to make a trade declaration for a container exported. Then we look at the movement, whether or not it did happen at the terminal. Has it been gated in? Has it been loaded onto the vessel? Has it left? So this is two set of data that we have to see to echo each other. So this is part of the data analytics that we have to massage it, and also to turn it into meaningful information when we turn over to the financial institution, because sometimes that will be too stretched for them to understand what does it mean. Okay.
Yeah.
Right. So we spend a lot of time to analyze it and then turn it into different views and then share with the financial institution. And how do we make sure, try the best to make sure, and try to screen out all these noises of the data. So this is where we come from. Of course, another dimension of looking at the data is not only for these two parts. The ultimate beauty of the data sets that we have on OnePort platform is due to the fact that, for example, an import cycle from a customer or importer and exporter, if they want to get a documentation from the shipping lines and then pass it over to the haulier's company to go inside the terminal to pick up a import container, it involves a whole chain of transactions among all the stakeholders, including shipping lines, freight forwarders, of course the importers, and also the trucking companies and also their drivers, right? At least I can count 5 of these already. And all this happens on our platform, right? And then we can see through who do they interact with. And that's, we are able to generate who are the customer of the of a haulier, right? Whether or not it is a big freight forwarding company like DHL, right? And that will be quite a worthy party that they won't go away not to pay for the haulage fee. So all this, we are able to look at the authenticity of the data by validating all these data from different angles. And we can also look at the business trend of a company, because all the data is generated day by day, right? Day by day. So depending on the financial institution requirement, they can look at the data day by day or month by month or quarter by quarter. And that's also generated a good perspective to the financial institution is about, right? They can react to the risk more faster. So they can go more aggressively to lend out in an uncollateralized basis, because they can react to it so fast, and which is not able to do in a traditional financing without data. So that's what we are providing and then work with eCOM and then the financial institution.
Yeah, that's great. I almost relate the first example to, when my parents travel to Hong Kong and I'm going to get in the car and spend the petrol money and pick them up from the airport. I want to know, did they get on the plane? Did they bring the thing that I asked them to bring from Australia? What time is their plane landing? How long am I going to have to wait for? If I can get all this information, because we do all these checks, it just makes life a hell of a lot easier. Now, look, just a quick warning to the audience. I think we're going to run over by just 4 minutes, and it's just a hard timing limit on each of the other speakers to just give a 1 minute answer each. But I wanted to quickly reflect on that to go back to Anthony. So given what you've heard here, how do you think these solutions could be incorporated in what Standard Chartered is doing? Do you see benefits in end customers? Do you believe that this can help address KYC, KYB challenges? A minute, I know it's quick.
Yes, Ben, I think answer is very, very clear. Yes, absolutely. If you listen carefully to what Horace and Philip just mentioned, how a bank do KYC, KYB is we have to validate what the customer told us, what they're doing. And we, as a bank, we need a lot of monitoring in terms of sanctions, AML, all these activities require exactly the information, whether this ship is it land in the right port? If customer tell me this is a 1 million container on the port, is it a real shipment? So all this data, even before we are able to build a risk model based on all this data, however, this data can be immediately applied in our day-to-day operation, in monitoring transaction, in risk assessment of customer.
Absolutely. Perfect. Thank you. What about you, Gianluca? Because I know you currently leverage eCom's data network with this VeloTrade EasyFi. So that uses alternative data to offer collateral-free, pre-qualified loans to trade finance borrowers. Again, I know it's a minute, but are there any intricacies about this you want to talk about? How much benefit it's provided? Are there other ways it manages ongoing risk, etc.? Anything you want to share on this, the key points in the next 60 seconds, would love to hear it.
Well, I think Horace and Philip already said all about how we are taking the data, we are analyzing the data, and we make sure that we continuously monitoring this data to understand whether or not the company is still, the SME is still capable of obtaining further loans, or if we need to intervene, whether there is some reduction in revenues or something is happening. Definitely, data is helping us a lot. We have developed our in-house model, so we plug in the data, and then the model is very quick to telling us, yes, you can finance, or you need further details. So ultimately, this is an ongoing process, but we started it with some clients. We see some results, and that there's potential for this to become bigger. Thank you.
Wonderful. Thanks, Gianluca. Look, I'm mindful of time. We would love to be able to unpack this and talk about the future, where this whole industry is going, but I am respectful to everyone here. We're already 5 minutes over. So I think with that, we're going to draw this to a close. If you do have questions, though, and you want to direct them to any of the individual speakers, feel free to drop us an email at what's the email? inquiries@quinlanassociates.com. You can send that there. And then I can forward it to the speakers, and if they have the time, they can obviously get back, and we can obviously facilitate as many questions and responses as possible on our end. I appreciate everyone for your patience and running over. I'm sorry we didn't get to a formal Q&A, and a huge thank you to all the panel participants for sharing your insight on what is a really fascinating but very, very important topic. There is a pain point. It doesn't matter where you look around the world. The SME trade financing space, it's a gap, and everyone's trying to solve it, and no one has the magic bullet. You've got MBFIs trying to disrupt. You've got the traditional banks using new forms of data. You've got these brand new financial institutions and fintechs offering their own lending services as well. It's fascinating. And then you've got players like OnePort that are supporting the development of this through the provision of that data. So I'm keen to see how this space is going to evolve, and I can assure you this is the first in what would be more panel discussions to come on this very exciting topic in future. So thank you everyone for joining. Thanks once again to our speakers, and look forward to staying in touch. Much appreciated.
Thank you.
Thank you. Thank you.
Thank you.